Hello and welcome to the week ahead video. Quite a few things to brief you on then. The next 5 trading sessions. It's likely to get off to a slow start given the UK bank holiday on Monday, with all eyes turning to the crucial meeting on Tuesday between the Ukrainian President Petro Poroshenko and his Russian counterpart Vladimir Putin. Now they are set to explicitly discuss the topic of de-escalation of the Ukrainian crisis, but tensions could not really be running any higher after the Russian aid convoy last week made its way into and out of Ukraine with very little resistance from the Kiev army despite violating Ukrainian sovereignty. This is also after the Kiev military parade took place over the weekend, where Petro Poroshenko announced $3 billion of military aid to rejuvenate the fatigued Ukrainian army. As such, there are probably 3 different outcomes we can expect this week. First of all, being positive de-escalation of the crisis, leading to an unwinding of Russian intervention within eastern Ukraine, which could be positive for risk assets. Could also see status quo, with the crisis continuing to linger in the background, or even an escalation of the crisis which could result in further sanctions against Russia, which would be very, very negative risk appetite, not just in Europe but also across in the US, despite US stock futures trading at all-time record highs on Monday. Now much of this is on the back of the dovish interpretation of Draghi's speech on Friday, where he was expected to acknowledge the highlight the inflationary expectation downside we've seen in the euro area. So more and more bets being placed that the ECB are likely to embark on some sort of QE program in the near term, particularly as Draghi lessened his onus on the fiscal reform seen as necessary by Eurozone governments. We should see an update for Eurozone policy this week, with the CPI estimate due on Friday, which previously came in at 0.4%, so we'll see if June's easing measures have had the desired effect of a pickup in inflation. Elsewhere this week we have the second reading of US Q2 GDP is expected to be slightly tempered, down to 3.9 from 4.0%, but still showing a strong bounce back from the fall that we saw in GDP in Q1 for the US, but likely to support the speech we saw out of Fed's Yellen last Friday, where she did slightly pull back on her dovish rhetoric. Of course, we'll bring you all those releases as soon as they hit the wires, as well as any other relevant commentary to your trading. But in the meantime, that's all from me. Make sure you have a fantastic week.